Hi friends, welcome back to one more video from Urban Trader. Today let's look at types of mutual funds and the importance of these different types of mutual funds and why we need to understand them. Let's get started. Yeah, before we talk about types of funds, let's look at just a recap on what we have understood in the stock market. We have regulators and then exchanges with facilities for the trading, and you have the company shares which get traded, and you have financial institutions which actually use these platforms to trade on the market, and then they have an instrument called mutual fund which basically helps us to invest. And we also looked at what is mutual fund in the previous video, um, where basically investors are identified and the money get pooled, and then the fund manager within the fund who has an expertise in terms of stock market and the stocks, he basically invests this money in the underlying securities, and then the returns are generated, and as a record the mutual fund as a record or certificate which is passed on to the investors. And we also looked at the key factors which in the mutual fund which we need to consider while we choosing the mutual funds. I think it's important to give some kind of an attention to these factors. Now with that backdrop, let's look at the types of mutual funds we have. Let's look at the types now. The types are based on, there is multiple ways you can classify these mutual funds based on maturity period or investment mode or trade type which happens in the mutual fund, and what is the investment objective, and also by what's the portfolio holding of a mutual funds. So let's look at each of these at high level. The first one is maturity period. We have two categories. One is open-ended and closed-ended. Open-ended fund is something which the retail customers can buy and redeem at any point of time with 1 day settlement period, and there's no lock-in period or a lock-in restrictions on the holding of the mutual fund. Whereas closed-ended funds, these are basically offered through NFO, and generally they have a lock-in period of 1 to 3 years. And the second category, if you look at by investment mode, we have two categories again here. One is in retail and direct. So investment mode is basically how the retail customers buy these mutual funds with the fund house. When the mutual fund is bought directly from the fund house without an intermediary or a bank or a broker, so generally the expense ratios are less, and these are called a direct mutual fund. And some of the bank and the brokers also facilitate these as a channel marketing, and then they sell in the market to the customers, and these are basically called retail mutual fund. And generally for these retail type of mutual funds, the expense ratio is higher. So yeah, we need to choose based on what is that we are looking for. Other way of looking at this by trade type. So this is basically the portfolio, how actively or passively the portfolio is managed. Some of them are passive funds which are basically benchmarked against the index skill used by the fund manager, but he only tracks against the indices. Whereas in active traded funds, the mutual funds are basically, these are where actively managed by a mutual fund manager, and he basically decides which are the stocks and underlying securities which needs to be bought and sold based on the timing of the market, or based on the stocks news, in terms of the profit and return or loss based on how the company is doing. So this is basically an actively managed fund. The other type is based on the investment objective. So it depends on whether we have bought the mutual fund basically for the growth perspective, where we think that we have a goal after a couple of years and we are investing today, and we want to get an asset which is grown after a few years of time, and we're looking at a growth aspect of the mutual fund. So that's the one way to look at. Other mutual funds also are in the market, which are basically income based mutual funds, which are basically provides in monthly or quarterly investments returns as a way of income to the investors. So this is basically an income generating investment or a mutual funds. So this is also based on the need, we can consider which one we are looking for. The other category to okay, so we have seen these four types of mutual funds based on the maturity, open or closed, and then investment mode is and trade type and the investment objective. Now let's look at what is the portfolio holding. So this basically generates the return, and it's important to give a look at this one. Let's look at this now. Yeah, so yeah, in terms of portfolio holding, I think there are multiple ways the mutual fund manager would hold the securities in the portfolio. These are broadly categorized into equity, debt, balanced, and money market. So let's look at each of these. In the equity mutual funds, we have multiple categories called large cap, mid cap, multi cap, small cap, and index funds also, and some of them are sector funds. So I think it's good to understand each of these with a little brief. When we look at the categorization of the companies, we can classify based on the AMFI guideline. If the market cap of the company is more than 10,000 crores, it's defined as a large cap. And some of these examples are basically the companies which have been sustained over a long period of time and which are represents the Indian economy, and they are very dominant in their areas of business operations. So if you look at HDFC Bank, this is the number one bank in India, and Reliance is in retail and oil giant in India, and then you have TCS and Infosys. These are basically in companies which are large cap companies, and State Bank of India is a bank which is a private sector large cap bank, public sector large cap bank. And when we look at the mid cap categorization, we have multiple companies here also, but these are not as big as the large cap companies, but they are decently size. They are more than 500 crores to 10,000 crores in terms of size. And some of these are Havels, TVs, and Bata, which basically on day-to-day basis people consume this, and there's a high demand is there, and they have a long way to grow further in terms of their market cap. And the next category is called small cap companies, which are basically the market cap is less than 500 crore. Some of these are PVR, Novin, Florine, and Apple. There are a couple of them are there. These are basically small companies which are growing, and their size is still below 500 crores. So what the mutual fund does is they basically pool money from us as part of the large cap mutual funds. They fund manager decides to invest these funds in these large cap funds and large cap companies, and that's how he tries to generate an income for the investors. And in the mid cap categories, the mutual fund manager decides to invest in the mid cap categories of the companies. And in the small cap, it's the same. It's the fund uses to invest in the small cap companies to generate the return. And there's a special category called multi-cap fund, which basically spreads across all the market caps. They usually invest in both all kinds of companies, both large, mid, and small cap companies. So they invest across all the categories. The other types of mutual fund is an index fund. This basically we have an index or indices called Nifty or BSE. Sensex. So the mutual fund are actually invested or tracked in these index funds, and then they try to generate a return out of it. As the economy grows, the Nifty indices or the Sensex indices grows, and that's how the investors makes money out of these. Some of the examples of the popular index funds within India, a couple of these I've listed here. And we also can look at the, in terms of how Nifty has done over the long period of time, and in terms of Sensex, this is Sensex. So this is how we could use investing in the investment uh, in the index fund. So maybe I'll explain separately in terms of what is this index fund and how we can utilize this concept. The other fund is sector funds. These are basically different sectors. We have banks, finance, software, consumptions, or pharma. So this is the AMFI definition of market cap and amounts of growth which are exposed in terms of derivative, and how mutual fund can also invest or offer specific sector based mutual funds, and investors can take the advantage of focused investment into specific sectors if they think they want to invest. And some of these are listed here as an example. And we looked at the equity funds, and let's look at the debt funds now. Debt funds are basically, these are categories of funds which are non-equity funds, and these are basically bonds of long-term, short-term, and low-duration funds. And there are also types of funds which are called overnight or liquid funds. Maybe I'll explain a little more detail in this types later. These are basically invested in the corporate and the government bonds, or the corporate debt securities and money markets. They basically provides an income based objective for the end customer. And balance fund is basically a combination of equity and debt funds, which will have a combination of 40 to 60% in terms of their spread. And these are basically useful for the investors who is looking for a medium to long term investment, and he wants to diversify both in terms of growth and also in terms of the uh, safety from these liquid funds. It just basically provides an mixture of both flavors of equity and debt, and it also provides a combination for him to diversify within the fund itself. And then we have something called the money market funds, which are basically invested in the certificates of deposit, commercial papers, and treasury bills. And these comes within defined or a short maturity period, and they are basically highly secured with a strong credit rating they'll have. So we have covered all the different types of portfolio holding types and how we can classify these. And this gives an overview in terms of how we can classify the mutual fund. And there's a slightly different way to also classify. I'm just putting it across here. And in these, the debt funds and the index funds, maybe I'll cover them in detail in the next video. So thanks for watching again.